So let me get this straight. In quarter three, Alibaba, they beat on the top line. They missed on revenue. And then they got lowered guidance. Okay. And then right here, this is the 1-day chart going back to Friday. The stock runs up to $154 and $155. Okay. And then it really started falling off. And like I said, trading back and forth the rest of the day, and eventually ended in a loss. But guys, I kind of want to go in backwards tonight. So what does that tell us? What does that tell us right here? Alibaba missed on revenue, and they got lowered guidance, and the stock initially shot up several $5, $10 per share, maybe $7, $8, something like that, before it got traded down with the overall market. So let's try to walk through this backwards, and I'm going to tell you what I think that means. So here we go, just a quick recap. A visual, Alibaba beat by 33 cents, and they missed by revenue, guys, by $140 million. To me, that's kind of a big miss, but it's a mega cap company, so they're going to have those kind of numbers to post. And then right here, Alibaba's up 4.6% despite quarter two revenue miss and reduced forward guidance. So, that's basically what this little article right here talks about, and I'm going to go ahead and tell you my theory on that. I think that institutionally and from investor standpoint, Alibaba is a very undervalued stock, but it cannot break through the resistance of all the trade tariffs. Okay, so what Wall Street is trying to tell us in so many words is that Alibaba is easily a $200 to $250 per share stock. That's getting weighed down by the overall Chinese market and all the trade tariffs imposed by the United States. So being the investigative personality that I am, I've been an Alibaba shareholder for a very long time, guys, and I actually cut my long-term position in half when the stock hit $160. And I've invested money in other areas. That was one move I made when I noticed the market was starting to decline very quickly. I sold half of my position in Alibaba. And really, guys, it's articles like this. It's fake optimism. So Donald Trump comes out and says, I think we'll make a deal with China on trade. Okay, so it goes on to read that U.S. President Donald Trump said on Friday that he will likely make a deal with China on trade, adding that a lot of progress has been made to resolve the two countries' differences, but warning that he still may impose more tariffs on Chinese goods. So, when I read that, all I hear is he's going to impose more trade tariffs, okay? So, China tends to run up into this kind of like fake optimism that, the United States and China is going to meet up and they're going to resolve these trade issues and put it behind us. But the past few times that we have come into this situation, it has just been followed, like I said, with more trade tariffs, which make the Chinese market move down very fastly, in a negative direction. That's why I think China is still very volatile. I'm still not quite ready to start investing in Alibaba again yet. I think the way you got to play Alibaba right now is every time they make a new 52-week low, try to buy some shares. Now, like I mentioned, I still have half of my original position from 2014, okay? But I did sell half so I had funds to trade into this mess that we are in right now. And we seem to be working our way out. But these articles right here, guys, they come across to me as a lot of fake optimism, okay? So, Trump is coming out, he's saying a lot of things, trying to make it appear that, this is a very optimistic thing, we're going to get together, we're going to put this behind us, but he also warns that he still may impose more trade tariffs. When Donald Trump says something like that, that means there's more trade tariffs coming. I got the 1-year chart pulled up on the Hang Seng Index, guys, and as you can see, it has been a terrible year for China. Just absolutely terrible, and I'm even going to break it down for a month. So we did see a nice spike here right at the end of October going into the 1st of November. But I think that's going to be met with some resistance soon. Like I said, I would not look at this as an investable level just yet. And here's why. Because if there's more trade tariffs imposed in a short period of time, that is almost a guarantee that I'm going to short the Chinese market. Okay, that doesn't mean I'm going to short Alibaba or Tencent. I have other funds, other ETFs and mutual funds that I will go and short to grab a quick couple percent off of. A lot safer, and a lot less volatile than Alibaba and Tencent. And that's the path I will go down. So, still love Alibaba for the long run. I feel like you gotta have it in your portfolio. And over on my N1 Finance portfolio, I do have a position at Alibaba that I will gladly follow it as the price drops, because this, Alibaba is still very bullish on it, still very bullish on the company. Definitely want to get involved with Alibaba, especially when the Chinese market recovers. Alibaba is going to go crazy, but I think this is going to go on for a little while. And like I said, you got to keep your ears very close to the news and media about these trade tariffs, because as soon as news of that hits, the Chinese, like the Hang Seng Index, it will take a massive hit. But I am impressed with this. It moved up 1,000 points on Friday. So I am very, very impressed. A lot of money was made on Friday in the short term for China. So, like I said, 1,000 points up, that's very impressive. But let me just remind you of the 1-year chart, not going in a good direction. So this little spike we're getting right now, we might end up shorting it if more trade tariffs are imposed. Thanks for watching, guys.